In this session, let's look at the ethics related case associated with the Glenarm Company. So, just as a quick facts of the case, uh, uh, Peter Sherman, the main participant of this case, a CFA, earlier worked with Pearl Investment Management for 5 years and now has moved to another equity oriented portfolio management firm, which is Glenarm, right? And here he has worked for 5 years, got very good experience, especially in the emerging markets, built a big brand for himself, has been really successful, got secured good number of clients to the Pearl Investment Management, has been continuously growing as a specialist in this emerging market arena, and even grown to the extent of becoming a primary analyst, especially in the emerging market segment. So as Pearl Investment was growing, even Peter Sherman's position was growing with them. And probably 5 years later, he received a call from one of the partners of Glenarm, which is a small equity-oriented firm, uh, which also had a kind of a tainted history with them. In the sense, they were investigated, censured, fined at least 3 times in the last 13 years. So it wanted to rebuild that reputation and get more and more clients. So one of the partners with this Glenarm, Mr. Lawrence, he was he was a member of that local CFA Institute Charter Holders Institute. He is a member in that local CFA institute. He has suggested that a good CFA charter holder will bring more and more professionalism to the investment management, and that is where finally Sherman got recruited into Glenarm as a portfolio manager. Now, the problem came, if we see some of the things that we need to look at is the expectation of the Glenarm itself is it will source some of the Sherman while moving to this company, he may source some of the clients of Pearl Investment, and he can grow the business, and he has a lot of contacts, especially because of his research department work, and also he was handling a lot of client operations, so he has a lot of contacts as he is working in the similar space as Glenarm is working in the similar space as the Pearl Investment Management also. And so to entice him, even Glenarm has Glenarm has even given a large portion of the first year's investment management fee, which was a tempting offer. The entire investment management fee, a large portion of it was being offered to Sherman to entice him to move from Pearl to Glenarm. And this had lured Sherman, so he has left Pearl Investment and joined Glenarm. But this is where the problem started. He started making calls to the various clients of Pearl Investment. He started making calls after the business hours. So the clients of Pearl saying that he is leaving Pearl and he is going to join Glenarm, so he is asking all his clients to switch their accounts to Glenarm. And along with that, he started calling those prospect clients which Pearl is very actively searching out for or actively contacting, but they have not yet finalized their deal with Pearl. He is contacting those people, asking them to move to Glenarm. Similarly, some clients which were rejected by Pearl, he is making a calls to those clients or prospects whom Pearl has rejected, and again trying to propose them to Glenarm. This all thing he was doing while still employed. While still employed with Pearl, he was doing all these activities. He was making calls to the customer, to the clients of Pearl, asking them to switch. He was trying to solicit those clients who were rejected by Pearl, saying they are very small in size. He is trying to talk to them and try to suggest them to Glenarm. And along with that, the major part is he has decided to carry the marketing presentations which he has prepared, the sample marketing presentations, and along with that the programs which actually designed the stock selection, asset allocation, so some kind of computer programs which were helping in selecting the stocks and allocating the assets, and all the other any other research material with which he has worked with, or news articles and all that stuff which actually becomes the proprietary product of the employer, right? All these will become the property of the employer, and whereas this person, he has carried all that, he has packaged all that information with him while moving on to his new company. So looking at this particular facts of the case, there are some clear cut violations from an ethics dimension which we can easily observe, especially the standard 4A got violated quite seriously, more associated with the duties towards the employer. The duties towards the employer got very seriously affected, because any activity that an employee performs as a part of his employment, it should be in the benefit of the employer. That is what is the major thing which CFA ethics talks about. So from that perspective, while he is still employed with Pearl, he has taken the confidential information of Pearl, the sample marketing materials and all, the research materials, the computer programs, they are all the proprietary properties of the Pearl. So the confidential information of Pearl has been taken, which is a serious violation, and along with that, the soliciting of the clients of Pearl, not the rejected client. The main problem is soliciting the clients of Pearl and telling them that he is moving to Glenarm and asking them to switch to Glenarm. So this is one more serious violation. So he is creating a kind of big violation in terms of not informing or not performing his duties towards his employer until he is relieved out of its duties. So it's a loyalty as a duty to the employer is getting very harshly violated. So as long as he is working there, he should not have done this particular task. And when it comes to the other stuff, of course, even if he is working, probably still contacted he could have still contacted the prospects who were rejected, right? But again, proposing them to Glenarm, some other competitor, during his employment with the current organization, that is not acceptable. And unless the property wise, any property, even if any employee has worked on it, it becomes a property of the employer only. So unless there is a written consent from the employer that he can take that particular presentations or any other property, otherwise it becomes a serious violation itself, right? So these are looked at as some of the violations as far as the duties towards the employer are concerned. So it would have been better if he had not solicited the clients or prospects until he had left the organization, and he should have informed his employer while he is planning to take any kind of property from the Pearl investment. And coming to the disclosures part, his consulting arrangements, whatever are there, consulting or any other outside remuneration earning kind of activities that are there, it should have been better if they are all disclosed, right? Otherwise there is some kind of a violation against he having a parallel consulting work, he earning remuneration through his consulting activities. So there should be a good disclosure about them, and even a permission from Glenarm in terms of whether he can still continue with those kind of activities or not, because he was performing some kind of consulting activities to the clients. Is serving as a consultant to third world companies, assisting them in attracting US and European investors. He has disclosed that to Pearl, but we don't know whether he has disclosed it to Glenarm. So it would have been better if he had disclosed that. Otherwise, even that comes out as a violation of the activity. So that's how we see ethics related violations, majorly in the duties relating to the employer, the loyalty part of it, and on the other side we also see the disclosures related violations coming up. Alright. So if you have any further questions regarding the same, you can get back to me by giving me a call on the number that I have given below, or you can even send in an email to me. Thanks a lot for listening to this session. Thank you very much.